Guys, I want to say thank you so much for all this new subscriber that I have on this channel. I really appreciate each and every one of you. For all you viewers and subscribe yet, if you get any quality content from these videos, please consider subscribing and join us on our financial journey to independence. So today was a crazy day in the stock market. I didn't get to do any trading because I was at work. I did pick up a couple of shares because it was a red day, and as I said, if I see a red day, guys, I'm going to continue to deploy money into my portfolio and pick up as much shares as I can. So I want to talk about how to pick quality stocks and invest in quality companies. So don't if the market have a red day, you could still see profit in your portfolio. And my large portfolio right here, my Robinhood portfolio is currently down over $1,300, and my small portfolio that I picked for the long term is doing phenomenally well, guys. It's like I'm up 39%, and that's crazy because although the market is in a red day today, my portfolio is doing phenomenally well. So let's jump into the portfolio, and I'm going to show you the type of stocks that I'm invested in and all in for the long term. Very bullish on EV company. So every single one of my portfolio will have NEO or some type of EV in my portfolio. So I currently have 4 shares of NEO of a cost base of $16.29, guys. So NEO is doing phenomenally well. NEO Day is coming soon, and as I said before, guys, NEO is already branching out in Europe. They have an office in the United States. Once they work out some agreement with the US government, and once the American-China trade war ends, NEO could actually start selling their vehicles in the United States, and I see NEO could go to $100 to $500 within the next year or two, guys. So I'm going to continue to pick up as much shares in NEO as I can possible. So every week I plan to pick up at least 1 or 2 shares in NEO. So the next stock I have is Walt Disney. I currently don't have a full share as yet, but I'm still up over $20, guys. 38% from since I started investing in Walt Disney. And the way how I used to invest in stocks, guys, I look at Disney when I was little, and it was putting out phenomenally shows, and now they have Disney Plus. The theme park is not open as yet, and they're still doing so phenomenal. I continue to invest, but now I look at the fundamental of the company, the outlook, and the CEO, guys, to know if the company is worth investing in. And Disney is worth investing in and holding for the long term, guys. The next stock is Dirty, guys. I currently have 1 share of Dirty of a cost base of $88.52, guys. So Dirty is a restaurant chain, and they own a lot of different locations, and they're well diversified in their portfolio, guys. And since that I work in the hospitality field, I feel Dirty is one of the best company to have in my portfolio. So the next stock, I'm very bullish on the cruise line, guys. So I have 5 shares of Carnival Cruise of a cost base of $18.32. Once the pandemic is under control, guys, I expect as soon as they say the cruise line could go back out to sea, Carnival Cruise stock price is going to go back in less than 2 days to $50 per share, guys. So this is the lowest position I have. In my rest of portfolio, I have 102 shares, and one I have 83 shares, guys. So I'm going to continue to build these portfolio around these growth stocks so I could see substantial gain in my portfolio in the long term. The next stock is Nike, guys. No matter what you want to say about Nike, the conservancy that they bring when they get news, the ups or down, Nike will always be performing well, guys. And once you have sports, you'll always see the athletes wear Nike, and Nike is gonna be a well long-term hold in your portfolio, guys. As I said, although I'm saying these guys, I'm not a financial advisor. You want to do your own research and your own due diligence when investing in the stock market. But Nike is a long-term hold, guys. If you hold Nike for the long term, you can see substantial growth in your portfolio. The next stock is Pepsi, guys. Pepsi was around since before I was born, guys, and they continue to doing phenomenally well, and they well diversify in their portfolio. So that's one of the main reasons that I'm investing in Pepsi. And since, as I said, since I started this portfolio, guys, I'm always up and continue to seeing an uptick in this portfolio. I currently have Pepsi less than a share of a cost base of $138. So this portfolio, I invest $110. I'm about to add $10 more tomorrow to this portfolio, so $120 into this portfolio every single 2 weeks, guys. And I'm gonna continue to add into this portfolio as I see fit. So the more I feel comfortable adding money to the portfolio, every single month I'm gonna add an extra $10. But for right now, I'm just gonna put $120 for every 2 weeks in this portfolio, guys. So the next stock is Johnson & Johnson. Johnson & Johnson does not have the vaccine as yet, but is a pharmaceutical company, and they have a lot of drama, but the CEOs have phenomenal plans for this company. So I'm going to continue to hold Johnson & Johnson, and they pay a dividends, guys. So as you should know, I'm a dividend/growth investor, and I'm going to continue to take that passive income and reinvest it back into the portfolio, guys. So Coca-Cola, guys. If you have Pepsi, you want to have Coca-Cola in your portfolio, guys, because Coca-Cola do phenomenally well when you have a stock like this in your portfolio. I currently have 2 shares of a cost base of $49.02. So Coca-Cola is nothing to say about Coca-Cola. Coca-Cola did not cut their dividends through the pandemic, so that's one of the main reasons I continue to hold Coca-Cola, because they did not slash their dividends, guys. So Microsoft, Microsoft, I have less than a share of a cost base of $212.70. I'm gonna continue, as I said, guys, continue to invest every 2 weeks in this portfolio and see this portfolio grow. The next stock I have on the portfolio is Walmart, of a cost base of $138.06. So Walmart, I currently own Walmart for the dividends and the long-term growth that I see Walmart in. Walmart is trying to compete with Amazon, and they paid out the dividends, so I'm just gonna hold Walmart for the long term for the dividends. The only stock I have in the portfolio that's currently down is Chinese Mobile, and the reason that Chinese Mobile is down, because on the 11th of next month, if the executive order still stand in place, Chinese Mobile could be blocked from trading in the United States. So no one will really want to invest in Chinese Mobile. So I currently have 3 shares in Chinese Mobile. I'm going to still continue to add to this position. It's a very risky position, but the dividend is $1 per share. And I'm going to continue to increase my position in this company. But I'm just going to wait and see what the government is going to do about the China-American trade war, and see how I'm going to invest in this portfolio, guys. So guys, if you like the contents that I'm putting out, please like, subscribe, share, leave a comment in the comment section, hit the notification bell for any future update. And a small portfolio you could start with and